Today's March 12th, Saturday, and we're going to follow up on the S&P and what's likely to happen this week and the next few weeks. So far, we've been anticipating a decline in the S&P, and we have been pretty accurate about exactly what has transpired so far. And the good news is that for those who are short the S&P, it did fall on Friday. It started to go down. We expected a high possibly on the 11th, and it came in. And there's a very good chance that this week and the following week, between now and the end of March, the S&P will have a fairly significant drop and finish its initial wave down from the January 4th high. And at that point, the end of March, early April, for those who are short, and for those particularly who have ETFs or options that are leveraged, we would recommend it would be a good idea to step aside and go to cash again, because there's a good chance that starting early April, the market may rally, and it may rally strongly enough so that option positions would be severely challenged because of the increasing expansion that they're having due to the excess of volatility. Probably will shrink, and the reversal will cause people's psychology to shift, and it's a good time to kind of say, okay, we made enough money, let's take it. Meanwhile, so next week, starting Monday, Tuesday, Wednesday, there's a pretty good chance the market will fall Sunday, Monday, Tuesday into the middle of next week, and that there's another potential high point on the 18th or the 21st. If indeed that's the case, it is not likely that high will be anywhere near as high as it was on Friday the 11th. But nevertheless, it could be a bounce at the end of the week this week, and continuation from the 21st to at least the 24th or 25th fairly directly. Between the 25th and the 30th, it may get a little more choppy, and the low point could come out as late as April 7th. We're going to have to do a little more research to fine-tune exactly where the low is, but we're considering after the 24th of March that you want to watch it very carefully and look in terms of minimizing risk, bring your stops down if you're using stops, potentially lighten up your positions. And I think you probably could hold through the end of March into early April, but it's possible the low could come in on the 24th or 25th of March as well. Okay, having said three different things about the end of this, I think the bottom line is after the 24th of March, you want to be more alert, more careful, because the volatility is so extreme that all it needs is one or two big up days and it can eliminate quite a bit of profitability. That's the story that I wanted to add from last week. All right, thanks.